All right, BBBY. So BBBY, I believe, is nearing a very important bottom, and in this video, I'm going to give my thesis on why I believe that to be the case. So you can't see what happened before here anymore, but I did make some videos on this in the past, and if you're familiar with an EMOI, you know how bullish divergence works. Bullish divergence is when price makes a new low, but the daily velocity, or whatever time frame velocity, does not make a new low with price. So let's just take, for example, here, we can see price was 642, the daily velocity was negative 23, and then price made a lower low, and the daily velocity never made a new low than here. That tells you buyers are stepping in, and it tells you before you see the reaction in price that buyers are actually winning the fight, and they'll be able to turn price shortly afterwards. So when other people are watching this without an EMOI, they see price at 642 and then they see price at 476. Looks to them like the sellers are winning this fight. But for us, we see that the most extreme negative daily velocity print was negative 23, and that came when price was 642. And when price sold lower, if this was indeed a bearish move, the negative daily velocity would have been more extreme than it was here. Because the negative daily velocity actually got better, if I remove price, you can see it more clearly. Because the negative daily velocity actually got better as price was selling down, it told us that buyers were really winning this fight, and we can expect a strong recovery shortly afterwards, and sure enough, that's what happened. Now, if we zoom into this portion of the chart, we can see that we had something very similar. Now, the daily divergences bring price back to the daily trigger. So here's your most extreme print, and then price had this sell-off and bottomed right about here. So this is one new low. So here's your most extreme print, and then price makes a new low. The daily velocity does not. The rules of an EMOI are that once you have 3 bullish divergences on whatever time frame, you have to expect price to revisit that trigger. So we're on the daily time frame right now. Purple line is the hourly trigger. If there was bullish hourly divergences, we have to expect price to revisit the hourly trigger. But here we can see the most extreme print. Price makes one new low, price makes a second new low right here, and then when price makes this third new low, throughout this entire time period, the daily velocity never made a new low. And that tells you that, you know, buyers are going to be able to push this thing back to the daily trigger, which is exactly what happened. Once price goes back to the daily trigger, you actually reset the count. So now, here we're selling, daily velocity, when price is at 508 was negative 0.6, and then price makes a new low, daily velocity agrees. When daily velocity agrees with price making new lows, that tells us sellers are in full control. So if price makes a new low and daily velocity makes a new low, we have to expect price to make an even new low. And so sure enough, price makes a new low, and the daily velocity makes a new low, so we have to expect that price is going to make a new low. Sure enough, price makes a new low, daily velocity makes a new low, so we have to expect a new low. Sure enough, price comes down, daily velocity makes a new low. However, here is your most extreme print. Now, your most extreme print came when price was 3.54. Here is your first bullish divergence. So you have one bullish divergence here because price made a new low without the daily velocity making a new low. And when price came down here, this is your second bullish divergence. And so one of two things happen at this point in time. If price makes a new low, anything under 308, in an EMOI, it's a screaming buy because we know that this is going to be our third bullish divergence. Here's your most extreme print. Remember, this one came before the move back to the daily trigger. So on this move, the count resets. And then we're selling. Your most extreme print is right here. Price was 354. So this is your first bullish divergence. This is your second bullish divergence. If BBBY would make a new low right now, that's your third bullish divergence. And within a very short period of time, we can expect price to snap back up to the daily trigger currently at 438. And so a new low would actually be inherently bullish for BBBY. But price can still revisit 438 without a new low. And that would happen, which is once you have 2 bullish divergences, right? Here's your most extreme print, 1, 2. If price can get over the hourly trigger, which is currently at 327, then you would also expect a fast market attack of this daily trigger at 438. So BBBY, however you look at it, we have a really bullish case. Either price is going to break above 327 and run to the daily trigger at 438, or price is going to get slammed back down one more time, but a new low would be our third bullish divergence, and we'd still expect price to rise to 438. Now let's talk about weekly divergences for a minute. So on the weekly time frame, we can see that the most extreme print actually came right over here. When price was about $5, right? And the negative weekly velocity is negative 3.4. Then price sells and makes a new low right here. And this new low, the negative weekly velocity is negative 3414. Over here, it was negative 3454. So although it's very slight, if this move was inherently bearish, if there was no buyers here, the weekly velocity would have printed a more extreme print to the downside. But what happened? Here was your most extreme print, and when price made a new low, weekly velocity did not make a new extreme print to the downside. Here was negative 3454, and here was negative 3414. Now, price made a second low, and the weekly velocity still did not make a new low. So here's the double bull case. If BBBY would make one more low, that would be your third weekly bullish divergence, and then we would have to expect price to snap back up to the weekly trigger. So whichever way you look at this, it looks to me like a really strong turning point low is forming on BBBY. Either we'll have one more new low, which will be bullish divergence on the daily trigger and bullish divergence on the weekly, we'll have bullish daily divergence and bullish weekly divergence. And so not only would we expect a sharp market attack for 438, we'll also expect a fast market attack to 776. Now, let's just give a couple of examples of how well the weekly velocity works. So let's look at MMAT. And we'll bring on the weekly velocity. So just to show you guys how well this works, if you're looking at this chart, where is the most extreme print to the downside? It's clearly right here. The negative weekly velocity was negative 0.6, all right? Then price makes a new low. This is all one level, so this is one new low, and you can see that the weekly velocity did not make a new low. Then you have your second bullish divergence, right? Because weekly velocity did not make a more extreme print than here. And as soon as price made its third bullish weekly divergence, price shot straight to the weekly trigger. And afterwards, it moved up above its weekly trigger, entered an air pocket, and attacked the monthly trigger. So once price moves above the weekly trigger, it's called an air pocket, and I tweeted about this. I said we could expect 2.17, and that's pretty much exactly what happened. So that's one example of bullish weekly divergence working really well. If we want to look at a second one, we can look at Mullen, and with Mullen, we'll bring on the weekly velocity. So here was your most extreme print to the downside, and then you had one new low, here's your first new low, here's your second new low, and then this is all one leg down, but this is your third new low. Now price did move from 22 to 57. The fact that it came back down is actually pretty unusual. Usually it makes a market attack straight to the weekly trigger, but because we already had our 3 weekly divergences, we would still expect price to attack the weekly trigger. It may not have happened immediately, but it looks like it's on the way to do such a thing. So that is kind of how bullish weekly divergence works. And so to recap for BBBY, if we would have a break above the hourly trigger, which is currently at 327, because we already have 2 bullish daily divergences, your most extreme print was right here, and then you had 1 new low and 2 new lows. Because we already have 2 bullish divergences, that tells us that if price can get above the hourly trigger at 327, price can run to 438. And because we already had 2 weekly divergences, that tells us that if price were to make a new low, then that would be your 3rd weekly bullish divergence, and we can expect a fast market attack towards this weekly trigger at 776. Good luck.